this is P.R. Sundar. Welcome to this special episode where I am going to talk about the target for NIFTY in 2024. Thumbnail itself shows, it's 24K, so there is no surprise. But I am going to explain why, what are the risks, what are the rewards, what are the good things, what are the bad things, and everything. Right. So the first thing is that, if you look at the India weeks, that is somewhere around 12 to 13. So first let me tell you what is India weeks. So if India weeks is around 12, so that means that, the NIFTY is expected to make a 12% move on either side. But in the long term market has to go up only, and short term there may be some problem. So therefore we can reasonably expect 12% upside. So that is number one. And number two, this is only the expectation. And there is a saying in English, implied volatility is always higher than the historical volatility. So what does it mean actually? Always the expectation is more than the reality. So if India VIX is 12 or 13, the expectation is that NIFTY may move 12 to 13%, but reality most of the time it is always less than that. So reasonably speaking, one can expect roughly about 9 to 10% move on either side in reality. Right. So we just take it roughly about 10%. So this is the calculation based on the India VIX. Now I'll give you some other arguments. Suppose you put the money in bank fixed deposit. So what is the rate of interest you are getting? If you go to top banks, like HDFC Bank, ICICI Bank, you may get 6.57%. And you go to some smaller banks, some AU small bank and this and that, so you may get 7.58%. Okay. So you are getting around, 7 to 8% return without any risk. But when the people come and put the money in stock market, so they are carrying the risk. So naturally, the reward in the stock market has to be slightly more than the fixed deposit return. So that is that is called risk premium. You are taking a risk, so therefore you need a premium return. So therefore logically you can say about 9 to 10% return in stock market is good. This is the second argument. Now look at the third argument. Historically, if you see the last 25-year, 30-year time frame, okay, stock market has delivered a slightly better return than the public provident fund return, or you can say FD return. So over a longer period of time, so stock market has given 1 or 2% more than the fixed deposit interest. So now fixed deposit interest is only 7 or 8%, so you can expect 9 to 10%. This is another argument. And now I'll give you the fourth argument. If you look at the NIFTY spot and NIFTY future in the beginning of the month, so there is almost 150 point premium. Okay, so suppose if somebody, instead of buying it in the cash market, if he take a long position in futures. A cash market means you buy NIFTY Bs in cash market and you go long in future. So if you go long in future, you are paying 150 rupees more premium for buying in future. Then at the end of January, so that future will expire, you have to close it and you have to buy new future in the month of February. Again you have to pay 150 rupees more. So like this for 12 months, if you keep paying 150 rupees more, you end up paying 1800 point premium. So for 1 year, if you want to roll over by taking futures, and you are end up paying about 1,800 rupees. So 1,800 rupees is almost 9%. 9% you are already paying, premium for futures. So if you go long in future, for 12 months you continuously roll over, even Nifty moves higher by 9%, you are going to make zero return. So it has to move at least 10% so that you can make at least 1% profit. So why that 150 rupees premium? Why not 5 rupees premium? Why not 10 point premium? Why it is 150 premium? So that's because, Nifty is expected to move around 1,800 points. And that is why the future premium is getting into that territory. So by looking at all these arguments, a reasonable expectation is roughly about 2,000 point move in Nifty. It can be either side. In a normal market condition, it should be on the higher side. But however, some coronavirus, Lehman Brothers collapse, so many bad things can happen. So it can fall down also. Most of the time when it falls, it can fall more than 10%. Okay, so that's why the average they are coming to that 12, 13 like that. Okay, so if it is a normal market, without any big problem like Lehman Brothers collapse, coronavirus and this and that, and if the market, behaves, the probability of that is happening is very, very high this year, because, this year, US markets, the interest rate is expected to go down, right? And of course, there are some negative things also. So I will discuss those negative things and positive things separately. So the reasonable expectation right now, the Nifty is around 21,700, 800. So if you take about roughly 2,000 points, so that takes you to 24,000. Okay. Now, so I've given you my target for 2024, the 24 at 24K. All right. Now, coming to the expected positives and negatives. Okay. First we talk about the risk factors. Okay. The biggest risk factor for Indian market is 2024 parliament election. And parliament elections, if you are looking at back the past 4 parliament election, 2004 parliament election, BJP lost and Nifty fell 30%. And if you can remember, even in 2004, so BJP's main issue was India shining, lot of developments. Okay, so they kept on saying India shining, but they did not shine in the election. So they lost and Nifty fell 30%. And remember, BJP was in power only for one term. Okay, when BJP loses, when Nifty fell 30%, okay, I'm not, pro BJP and I'm not anti BJP also. I'm just giving my argument only purely from the stock market perspective. For one or the other reason, if BJP loses, there is a possibility Nifty can fall 20 to 30%, just like it happened in 2004. So in 2004 also they said India shining. Now also BJP is saying, developments only. They're talking more about developments, right? And so that possibility is there. So this is one of the biggest risks that Indian investors are facing. Now, what happened in 2009? Everybody expected hung parliament, but Congress won and Nifty shot up 20% in one day. And in fact, I don't think that any other market shot up 20% in one day in the world history. So that has happened. And one of my friends had a short position in just one lot. He lost 2.5 lakh rupees. So, but I do not think, any such thing can happen. Okay, right. 2014, BJP won but market did not go up much. 2019, BJP won, market did not go up much. Now the question is, Congress won in 2004, but market fell 30%. Congress won in 2009, Nifty shot up 20%. And BJP won in 2014, Nifty did not go up. And 2019, BJP won, Nifty did not go up. So 2 Congress winning, 2 BJP winning. One is a huge negative, other one is huge positive, the remaining 2 neutral. So if you see the, in one perspective, but it should not be seen in that perspective, and it has to be seen in the perspective, 2004 everybody expected BJP to win, but they lost. And 2009 nobody expected Congress to win, so they won. So both have become surprises. 2004 was a negative surprise, 2009 was a positive surprise. Then 2014 BJP won, 2019 BJP won. Let me tell you, both are not surprise. Because everybody knows BJP is going to win. Everybody is expecting BJP to win. So therefore, there was no surprise there. Now coming back to 2024, especially after winning 3 major state elections. So now everybody is thinking that BJP will win. So if BJP wins, then it is not a surprise. So it is not a surprise, so therefore markets will not be reacting violently on the higher side. In fact, Nifty shot up nearly 3,000 points in November and December. That is already been factored in. I always say there is something called market efficient hypothesis, which says that whatever you know, everybody knows. Whatever everybody knows, it is already been factored in. So 2024 BJP win has already been factored in the markets. So therefore, if BJP wins, it is not a big issue. Markets, market may go up, but no, not like 10%, 20% up. But on the other hand, if BJP loses, that will be a very, very big negative surprise. And market may react something like a 2004. Of course, that may not react to that big magnitude, but at least 5-10% markets can fall. So this is one of the biggest risk in 2024. Now second risk is the geopolitical tension. So when we started 2022, what has happened? Russia-Ukraine war broke out, and even now it is still continuing. How many months, how many years? Okay, then we thought that is the only country having a problem, but then now this Israel-Hamas problem started. That's a second geopolitical tension. And then what happened? Yesterday there was some news, North Korea fired about 200 missiles into South Korean island. So, these pockets, okay, Russia, Ukraine is one pocket, North Korea, South Korea one pocket, China, Taiwan is another pocket, then Israel, Gaza is another pocket, at least, India, Pakistan was also one pocket last time, but now, that is not really very big, okay, so that's almost subsided, we can say. So, like this, there are so many pockets in the world, so suddenly geopolitical tensions can arise, and that can, bring the markets down all over the world. That's the second one. And a third one, US markets are still struggling, and after hitting the inflation of 9%, now it has come, around 3.5 to 4%. So how the rest of the month is going to go, or rest of the year going to go, so we do not know. If there is any surprise negative things develop on the interest rate front. In fact, in the last minutes also, the Fed was not clear when they are going to cut the rates. They were clear that they will be cutting the rates, but they were not clear when they are going to cut. So that brings some kind of an uncertainty. Right? So there are always other uncertainties like on January 1 there was some earthquake in Japan and tsunami warning, so some natural disasters. So these are all the possible negative things. But what are the positive things? Okay, number one, positive thing I'll tell you. Whether BJP wins or Congress wins, okay, the markets will be good in India because India has its own plus points, potential, and Indian markets are always trading at a premium to the global markets. So even if BJP loses, the markets may temporarily fall 10% or 15%, but ultimately will shoot up. If you can remember 2016, what all the people said, everybody said if Trump wins, market will crash. And what happened? Trump won. What happened? Market crashed. But what happened after that? US market has seen the most bullish period. So same thing. Now people are saying if BJP loses, market will crash. What happened? If BJP loses, market will crash. But after that, you will see that one of the biggest bull runs. So in India, it doesn't matter who rules the country, it does not matter, India will grow. Okay, so just for joke, somebody said, okay, other countries prosper because of the government and India prospers despite the government. So no matter who rules the country, our country will grow and our stock market will be good. So that is one positive thing. That's because India has the highest population, highest democratic population. So they both are really very, very important. Okay, so that's one positive. And second positive is that the world has already seen the worst possible scenario in the last 2 years, and going forward the interest rate can only go down in US markets. So when the interest rates goes down, so naturally stock markets will go higher. So that is already seen, visible. So these are the positive things. And of course, at the end of the day, no matter what you talk, the share price of a stock is based on that company's performance. So the company's performance, corporate results, so if they are good, and the beginning of the year 2024 may not be really very good, and Infosys and TCS will start the results next week, but IT companies are not expected to make a good progress in terms of corporate profitability. They are facing a lot of challenges. But except IT sector, all other sectors, are supposed to be doing well. So corporate results, is likely to be a positive factor. So because of all these things, but the reasonable expectation for 2024 is 24K. Okay, now the question, sir, let the market go to 24,000 or 25,000 or 23,000, who bothers? How are we going to capture that? So what is the strategy? How can we make money? Right? Okay, so this video is already too long. So therefore I will come out with a new video maybe next week. I'll give you one strategy at free of cost. That's what we discussed in the paid strategy, but I'm going to give free of cost. And let me tell you the psychology of the people. I will tell you very clearly, my next video which I'm going to put, I'm going to discuss a free strategy, will not become a popular video. You know why? The psychology, let me tell you. Many people ask me, sir, can I get a free ticket for your workshop? I don't have money. Sir, can you do the workshop free? Okay, let me tell you, tomorrow if I do workshop free, people will not come. I have done free workshop in 2013, but not many people came. Right? What is the psychology? People think that, if something is given free, they think that it has got no value. So what actually the people are expecting, I must conduct a workshop, I must charge 1 lakh rupees fees from all other people, And to these people, I have to give them free. Then only they will believe that because other people are paying 1 lakh rupees, it has got value, I am getting free. So it has a good value, therefore I want it free. But if I tell free for everybody, they will think that no, it has got no value. Okay, so this is my view. So let me tell you, okay, if the people who really demand free from me, I will do one free next week. Let me see how many view that video gets. And if people mentality is right, and that should be my most popular video for the year 2024. But I'm 100% sure that's not going to be the case. So this is where I just discussed the psychology, right? Yeah. So okay. So I think this video is already long. So I wanted to show something. Maybe I thought of discussing the strategy in this video itself. So there is no time. So therefore, I will do a separate video for the strategy to capture, when Nifty goes to 24,000 in the year 2024. So a disclaimer, number one, I'm not a SEBI registered. I think by this time everybody know because I paid 6 crore penalty to SEBI. That means I'm not SEBI registered. So here I'm just sharing my view. Okay. So if you want to take a position, you consult your financial advisor. So hope you enjoyed watching this video. Thank you for watching.